I want to get, first of all, a sense for our viewers of exactly what your new company will look like and how it relates to the old company. We're going to put a pie chart up, but it really is related to the DowDuPont, and so it doesn't compare quite apples to oranges. If you can tell us how much of the pie you're basically going to have, this is what it shows basically where the various constituent parts are coming from: packaging and specialty plastics, agriculture, industrial intermediaries, performance materials and coatings, and other. So where do you fit into that?
So if you look at those three segments called packaging and specialty plastics, industrial intermediates, and performance materials and coatings, those three will make up the new material science division. That will become the new Dow, and our target is to launch that through IPO in the first quarter of 2019, and we're well on track for that. That will be the most innovative material science company in the world. It will be almost $50 billion when we spin it out.
Well, that's what I was going to say. That's a lot of that pie, actually, that you just described is going to be in there. So how big in revenues are going to be? How many employees are going to have? Give us a sense of how big the breadbasket is.
Right. So we're about 50,000, maybe a little bit more than 50,000 employees today, about $50 billion in revenue. We just closed, we just had earnings yesterday, so materials division booked just over $12 billion of revenue, and that was aided by a lot of new investments that we've made in our core businesses. That company will be the bellwether, I think, materials company in the sector, and that's what our target is, to be the best-in-class performer in that sector.
You said you're going to be the most innovative. What makes you the most innovative? What distinguishes you from your competitors in that sector?
We have a very powerful innovation engine at Dow, and we have a tremendous amount of process technology behind that innovation engine. We've made huge investments in high-speed throughput research and development. So our time to commercialize products and bring them to market is fantastic. We brought 5,000 new products to the market last year.
And let's drill back and talk more about the macro look. So that's sort of how you're operating. Let's talk about the environment in which you're operating. In particular, I want to talk about tariffs, because aluminum prices at one point shot up 30%. 30-day volatility was really high. Hot-rolled steel here in the U.S. also had a surge. How does that affect your business decisions on where to build plants?
Well, look, we're in the middle of a tariff discussion right now that I think is targeted at trying to make sure that we have fair trade and fair regulatory enforceable practices in place. It's also targeted protecting IP and making sure that we're protected from dumping in the country. And so, in my view, I don't think this is going to have a big impact on our business. Most of our plants are located around the world. We have plants in, for example, Sadara in the Middle East, which was built to service the Asian markets. We just finished a large number of plants that we constructed in the U.S. Gulf Coast, which were built to service North American and Latin American markets.
But if you were deciding where to build your next plant, you just made that $6 billion expansion in Texas, and you wind up having input costs like aluminum and steel to build it, that has to wind up affecting where you want to build the plant.
But I think when you look at aluminum and steel, and you look at some of the things that are happening through these negotiations, we're hearing things like Canada and Mexico might be exempted from that, South Korea might be exempted from that. And when you look at sourcing for aluminum and steel primarily for us, we'll be able to get steel from many other places around the world and source steel from other places. We have to look at a lot of different inputs when we build a plant. First, we have to have advantaged energy and feedstocks. We have to have good construction labor and obviously affordable construction labor. And we have to have a good regulatory environment to work in.
Jim, does it affect you in the C-suite in a somewhat different way? And that is just insecurity, undecision. I mean, uncertainty about what's coming. As you just described that. You described maybe there's a waiver here, maybe there's a waiver there, maybe this is happening, maybe that. Does that say to you as a new CEO, I have to hold off on making decisions?
Well, I think what's happening right now is you see the uncertainty in the marketplace today. You see people nervous, and I think that's why you've seen value run out of the financial markets. If you look at our end markets and what's happening with our consumer demand, then 70% of our business is consumer-driven demand. We just posted a fantastic quarter, and in all of our segments, we've seen double-digit growth. And so what's interesting for us is that we see top 40 economies around the world all growing positive GDP. We just delivered 22 consecutive quarters of earnings, year-over-year earnings growth. And in that 22 consecutive quarters, we did not have all 40 of those economies in positive growth territory. So our view is, yes, it puts some uncertainty into the market, but we still have to grow our business. We have to keep up with this demand, and we have choices around the world, including the United States, and we want to invest more here.
This is Jobs Day in the United States, as you know.
Right.
As you said, you're about to be responsible for 50,000 employees. Give us your sense of the job market. How hard is it to employ people? Are you employing more people? Is that growing? What's happening with wages?
A vast majority of our employees are in STEM education fields, so science, technology, engineering, and math. We hire a lot of degreed employees, but we've also ramped up a lot of activity on apprentices and community college 2-year degrees and apprenticeship programs through Dow, bringing them into the workforce. And just to give you an example, we've hired 16,000 employees over the last 5 years, really to replace a workforce that is aging and retiring out and renewing that workforce. And I would say in certain science and technology fields, things are tight. In IT fields, things are tight for us, and we do employ a lot of people in IT, both in our IT departments and in our manufacturing and research departments.
So your unit labor costs are going up?
Well, I think unit labor costs are going up because you've got a growing economy behind you. So people are paying more wages and more salaries.
So
and
you can pass it on?
We're passing on more wages and salaries, and we're high-paid jobs, right? We're not minimum wage employer. These are high-paying, really good jobs and good careers for people. And we've been paying increases in wages and salaries to employees over these past many years.
So part of that is going to wind up affecting margins, and the other is actually your business. And let's dive a little deeper here into the petrochem world. So we have a chart that shows plastic prices and then the input to plastic prices, and they're doing a little bit of a reversal here. So that white line are plastic prices. You can see them going down. The orange line is ethane prices, and the blue line is propane prices. And propane and ethane go into making end products like plastic. What are your margins looking like? How do you offset?
So we increased margins by 100 basis points in the first quarter. And it's a complicated game in plastics and in this part of the cycle because we have flexible feedstock capability inside the Dow machine. It's one of our competitive advantages. So we can crack the industry average for ethane. We can crack the max for propane of anybody in the industry, butane, or naphtha. And so we have the ability to move with those feedstock prices, and those prices move all the time, so we have to move with them. What sets the plastic prices primarily is supply demand for those products, and that's been tight because there hasn't been a lot of new capacity added over the last number of years. At these growth rates, you need the equivalent of 4 to 5 really world-scale plastics plants to keep up with those, for every 1% of GDP to keep up with that growth rate. And we haven't seen that kind of add over the last number of years. And in ethylene, which is the base feedstock, you need 4 to 5 world-scale ethylene crackers coming online every year. And what we've got in the forecast is only 3 to 3.5 every year for the next 3 years. So I think it says to us that things are balanced to tightening as we go through these next several years. And that's why you see people out talking about next wave of growth. And for us, it's the next wave of high ROC, incremental growth that we can deliver because we have made some big investments in Saudi Arabia and in the U.S. Gulf Coast.